Let's check in on shares of DraftKings as that stock was facing pressure today, off earlier this morning by about 6%, still off by more than 5% here after a report from short seller Hindenburg Research claimed that DraftKings, one of their subsidiaries, was operating illegally where gaming was banned and highlighted dubious connections to organized crime. That entity, dubbed SB Tech, was part of DraftKings' reverse merger or SPAC deal. Hindenburg came out and said that 50% of SB Tech's revenue came from illegal markets, citing statements from former employees, including one who claimed that the company operated in Iran, violating U.S. sanctions while the founder directly oversaw operations. And since that report, DraftKings responded in a statement to Yahoo Finance here, saying that the report is written by someone who is short on DraftKings stock with an incentive to drive down the share price. Our business combination with SB Tech was completed in 2020. We conducted a thorough review of their business practices, and we were comfortable with the findings. We do not comment on speculation or allegations made by former SB Tech employees. But for more on what this means for the stock and the growth story here for DraftKings, I want to bring on an analyst who covers the company, Loop Capital Markets analyst Daniel Adam joins us right now. And Daniel, when we look at this, I mean, you have a price target of 105 on DraftKings. Does this new research report and the response from the company change anything in regards to how you see the growth story shaping up?
Yeah, it's a fair question. The reality is absolutely not. The piece of the business that the report is referring to, SB Tech, accounts for today 10% of revenues versus the 25% or so that the report cited when DraftKings effectively went public through the de-SPACing process. And so, even at 50% of SB Tech's revenues, that would account for 5% of total company revenues, and that percentage will continue to decline. So if you look at the logic behind the SB Tech acquisition, it had never anything to do with external customers based in Asia or elsewhere, and more to do with integrating that technology into DraftKings' vertical tech stack so that they would have a fully integrated tech stack, which would differentiate them from virtually every other player in the industry. I think that, that piece and that part of the story has not changed. I can't comment intelligently as to whether or not these allegations that were made, relating to business dealings that occurred 5 and 10 years ago at SB Tech are actually true. But the reality is, fast forward to today, that piece of the business is pretty irrelevant in the grand scheme of things for DraftKings.
Yeah, the stock move seems to suggest that investors also sort of looking into what the business implications are. We have seen it come off of the lows in the session, but it's still down about 6%. I mean, what do you think investors are missing?
Yeah, well, I think they're missing, really the fundamental story, right? Which is hasn't changed, or if anything, just continues to get better. And so if you look at where estimates are, for example, for the year and where the company is guided to for revenues, it assumes quite conservatively, in our opinion, it assumes no new state openings. And yet, since they've updated their guidance last quarter, which they increased just based on the strong growth trends that they were seeing quarter through Q1, it doesn't account for states like Arizona, states like Maryland, New York, potentially, that will open up by the end of this year, which DraftKings will almost definitely participate in. And so I think that fundamentally the growth story that we're seeing domestically in the U.S., excluding SB Tech, is really firing on all cylinders. And so I think it's a matter of time before we see numbers come up and the stock price move higher.
Yeah, I guess one of the key things that might stand out here, if you think about the path forward for DraftKings, obviously a lot of it has to do with regulation and I guess, approval from regulators. And if you do believe some of the stuff in this report, kind of walking through maybe potentially how they misrepresented some of their business dealings when Oregon regulators were asking questions there, or potentially kind of about the connections to the triads, as they describe it in Hindenburg's report, with SB Tech. I mean, when you look at that, does that maybe potentially have any weight in how this company might deal with regulations moving forward? Or is it just kind of blanket, things are going to get greenlit on sports gambling and DraftKings will benefit the same?
Yeah, well, it's a fair question. And if you look at, all state regulators, the gaming commissions have a pretty a pretty thorough process in terms of vetting which entities will be licensed and which won't. And so, looking into prior dealings with alleged illicit and black market participants in the market in jurisdictions that are outside of the U.S., I think, quite frankly, it's something that the regulators would have asked, and to the best of DraftKings management's knowledge, as far as I'm concerned, just given knowing them both personally, having conversations with them, and then also covering the stock and hearing management speak in public venues such as your own, that they're very credible and not misleading. And so I think at the end of the day, if you go to the company's statement, I think it really gets right to the point, which is that Hindenburg clearly has a biased view on the stock. They have a short position, which they stated very straightforwardly in their report. And so they have an incentive to get the stock price down. And so that's what they attempted to do. But the angle that they took just really doesn't make sense fundamentally as changing the overall story. And I think to conclude that DraftKings is being disingenuous with regulators just doesn't really pass the smell test, so to speak.
And probably more reason as to why you're still maintaining that 105 price target there. But Daniel Adam, Loop Capital Markets Analyst, appreciate you taking the time to join us on that. Be